Yeah, somebody give me a stock to pick. So,
Apple.
huh?
Apple.
One that we don't trade because I want one
Oh,
we don't
okay.
have a bunch of lines on
Can
already.
we do Berkshire Hathaway?
All right, let's go there. You know the let me see. All right, so it's the BH. All right. All right, so let's go
I think
here.
it's BR, Berkshire, BRK dot B.
Dot
Hold on.
yeah, yeah. Okay, so here. All right, so all right, so all right, so basically I want to just get to one where we don't have a bunch of lines on. All right. So we could talk about support and resistance. So that's the first thing I'm going to talk about here is the support and resistance. Okay. Um, all of those other ones are kind of I got marked all up. That's why I didn't want to do one of those because I don't want to erase my lines either. All right, so the first thing you do when you're doing support and resistance, okay? Support is the bottom or the floor, resistance is the top. Okay, so that's the first thing that you want to do, right? On a daily chart, okay, you want to go to the day, and each candle here represents one day. Okay, so you can get an idea, right, of where this market is heading. Okay, so right now, looking at this chart, what can you guys tell me just based on looking at it?
It's
It's been
more
consolidating.
consolidation. Yeah, a
There
lot of
you go. There we go. We got a lot of consolidation. All right. A lot of consolidation. All right. So that's good. All right. So that's the first thing that I look at when I see, right? So based on what I'm looking at now, I want to take the highest candle that I see. Uh particularly if the wick is small, I'll just go at the base of the candle. If it's a long wick, I'll put it at the wick. But if it's, like a small wick like that, I'll put it at the base of the candle, right? I'll make this red. Okay. Then I'll go to the bottom. All right, the very bottom. All right, line again. You got these long wicks. I'll most likely put it at the wick. I'll change this to blue. All right, so this is the first thing that I do. All right, if I'm trying to chart support resistance, all right, and if you go back, these numbers will always be consistent. So we put this support here, right here, based on this bottom wick right there. But even if I go back, look how perfectly this bounces right here, right off that line, right? So even if you go all the way back, you gotta support it here and shut up. All right, support it here. So support resistance always works. So no matter how you draw them up, they pretty much always work. All right. So when I'm drawing support and resistance, all right, I like to, if I can, find what I call two candles that are at the same places, right? So here, what this red candle and this blue one, right? They close and open right at the exact same spot, right? Those are going to be strong areas of support resistance. So now on the day chart, I go down to the hour. Okay. I go down to the hour because that's based on a day chart. So I go down to the hour and I could do this again, right? I could do this again. So based on this is going to be the low. All right. This is going to be the high. All right. Let's go here. All right. All right. Then I go to the 15-minute. All right. Now I do the same thing here. All right. And again, the high, I was looking at this candle here, but even if you look over here, this candle touches that same line as well. All right, then I'll get the low. Well, the low is already, so the low of the 1 hour is exactly the same as the 15 minutes. So I don't need to put an extra line there. All right. So if I was only looking to trade based on these particular um these particular lines, I would have a good support and resistance. So what I would do is I would just wait for the market to either come here, see if it's going to support, or wait for it to come here to see if it'll reject. Because we know ultimately on a day chart, for the most part, it's been kind of consolidating. It broke out a little bit here into this range, all right, and then broke out here in this range. But for the most part, it's been right between these two ranges here, the two red lines here, right? So that's kind of basically what support and resistance is. Okay. All right. just a top, just find a top and find a bottom and let the market move based on those. So if it breaks below this area, now this blue line becomes, that was support, is now going to come resistance, right? Because again, the market never shoots straight down and never shoots straight up. Okay. So it's always going to what I call, when you guys hear me say it's about to pull back, right? So if it pulls back, right, it means that this market, say this market comes down here, it's most likely going to pull back to this line, which was a strong support, and then continue to come back down. All right. So always wait for, so again, if you missed the entry, say we got in here and then it came here and you missed it, it'll always pull back at some point. Okay. All right. Now, the next thing, which is really what I like to really look at, all right, which is supply and demand. Okay. Supply and demand is really what I like in terms of where the market is going to go, because most of the time the market is not typically going to go to a certain line or price, but it's always going to go to a certain area. Okay. So again, I'll go to the day chart. And what I want to do is I want to find a basing candle, right? And then a move off of that basing candle. All right. So let me just do this. All right. So let me just remove those drawings. So now on a day chart, so I want to find anywhere where there's a small basing candle and then there's a big either red or blue candle, right? So first thing that jumps out to me is this candle here. These two candles here. You got a small basing candle, then you got a large blue one. Okay. So now this lets me know that the market was typically coming down here. It tried to push down further, it couldn't, and then from there it made a huge candle here. All right. So what I typically want to do is I want to draw from the top. If I'm drawing a demand, I want to take the top of the basing candle down to the bottom of the wick. All right. Hold on. All right. And I changed the settings on mine where you could take it all the way over. I'm gonna change that back. All right. So if you get to your settings, you could change it to where it will automatically extend right. And that way you won't have to move it. But so here, so basically, all right. Basically, this lets me know. Oh, and then I'll usually turn the color blue because it's typically a demand zone or support area, right? So now, once I draw this up, so I got my basing candle, then I got a big one. Now, there are different types. There's a drop-based rally. All right, there's a rally-based rally. There's different types, but for the most part, the very basic is you want to just find a basing candle and a huge candle next to it, right? See if we can find one going down. You want a small, preferably a blue candle, and then a huge downward. But the market has kind of been in an uptrend for the most part, so probably gonna have to go back this way to find it. All right, here's one here. This is a basing candle. Typically, you want the basing candle to be the opposite color as the other one, but typically this can still work also as a supply zone, okay? And again, with the supply zone, you want to take the bottom of the basing candle and go up to the wick. All right, so boom, if I did this here, all right, so, all right, now again, got this big move down, came back up into this supply zone, and then it came all the way back down again, okay? Even here, you could take this all the way across. Came here, right? Got here, all right? Then you had a gap up, right? Now, all right, and still, every time it hits the supply zone, it reacts. That's why you see all these wicks in here, all right? That's why you see all these wicks, all right? Now, back to this right here. All right. So, and this could also be an area too that you have to worry about as this continues to come down. All right. But let's go back here. So based on the first demand zone that we drew, all right, now it came back this candle here. bounced up. This candle here bounced up, bounced up, bounced up, bounced up, right? And then it gapped down here, all right? But now, okay, so every time it hit this, had we taken a trade, whenever it hit this demand zone, right? So it went, so this would have been about 305.85, and this candle went all, this particular day candle went all the way up to 311.50. So let me do this. Let me rewind this. And let's rewind this here. All right, and let's see how this plays out. All right, so now, right, we draw up a demand zone. We got a basing candle. We got a huge bullish candle here. So now we're looking for the market to come back to this area, and then that's when we get into a trade. All right. Boom. All right. Here we go. We start to go down. All right. And boom, it hits this. And again, as soon as it hit this area, this would have been time for us to get into our trade. And again, if we took this 305, what is that, 78, okay? All right, 305.78, right? For me personally, if it came back to the bottom of these candles, which is 305.19, 305.20, this would have kind of been my mental stop loss. All right, so if it came back lower than these two candles over here, although again it wicked down here, me personally, if I get in here at the touch of the demand zone, I'm going to set my point to get out here. And it never came back there. It went all the way up the entire day. Now let's break this candle down from a 15-minute candle and see how this looks. All right, so now based on a 15-minute candle, all right, we would have waited until this pretty much got out of this zone, okay? Now, so had we, because technically here it's not really out of this zone yet, right? So it doesn't actually break out, right? This is why it's better to go on a higher time frame to find the resistance, the supply and demand, and then we can see. So technically it didn't start to break out until around here, all right? So now we would have waited until it came back and hit this zone, right? Which would have been this candle. So we would have got in here on this candle. All right, and then if you notice, it never came back this way. We'd have just continued to ride it all the way up. You see that? So that's what the demand zone will give us, right? So demand and supply zones will give us areas to where we can actually break out of this. All right, and if you keep playing this, all right, again, it never got back there. All right, hit it one time here, it went all the way back up. Hit it again, went all the way back up. All right, so this is, so supply and demand, all right, are great areas. Again, hit it here, went all the way back up. All right, went all the way back up. All right, and so this is currently where this market is now, right? So again, we had the gap down, all right, and then because the market is in a downtrend right now, simply because we have the PCE, and I'll go over all of this when I get to my weekly pre-market plan here in the end. I'll go through all of that. But so as it pertains to this demand zone, now that it's broken below here, now it's acting as a supply zone now. It broke the demand, now it's acting as a supply zone that every time it comes up here, it gets rejected. All right. All right. So that's another one. All right. So typically any questions on supply and demand. And again, you guys, I have a diagram that kind of shows what this looks like in terms of supply and demand. So this is also in the Discord, right? All right, shows us the law of demand, law of supply, the different types. So you got the rally-based rallies, down drop-based drops, okay, down-based down, all right, rally-based drop, down-based rally. So these are the different types of supply and demand zones, all right? So again, this document is actually in the Discord. So basically the same things that I just went over, it covers that here, all right? So that's what we're looking for when we look for supply and demand, okay? Any questions on supply and demand? All right, somebody give me another stock and we'll go and find some more supply and demand zones. What's another stock? Something that we don't trade, because I got a bunch of lines on all these other ones.
Can we do Wells Fargo?
Wells Fargo, let's do that. All right. All right, so Wells Fargo. So again, all right, the first thing that I see is what? When I first look at on the day chart, what am I looking at?
Drop base route. Oh, you talking about for support resistance?
Well, just period. When I first look at this, what does
Uptrend.
this market tell me? Huh?
Bottom and top to uptrend.
It's been uptrending, right? For the most part, we see the market start here. All right. We see the market start here. All right. And then we see it come all the way up here. All right. So the first thing that this tells me is that this market, the last couple of days, because it's a day candle, has been trending up. Okay. That's the first thing that I noticed. All right. And this is going to be important when understanding about the gaps and all of that. And again, I didn't finish that document. So it's not on Shania, that's on me. I haven't given it to her yet. But but this week, you guys, you'll get that, all right? Because when we have the gaps, it's going to be important to understand what the trend is when it does gap up or down, okay? But for the most part, we see, all right, that this is actually, all right, this is Sophia. So this is actually an uptrending market, okay? So now, but if it's an uptrending market, am I going to be looking for supply or demand zones? What we think? Demand zones, right? Because I want to see an area that it's going to come back. Because again, the market never goes all the way up and it never goes all the way down. So although this has been uptrending, right, it's still going to hit an area, okay, to where it's going to pull back to that we can get into the trade and then take it up, okay, and then take it up. Let me see. So let me see something here. All right, now, number one, all right, we got a hammer. This is what starts this rally, okay? You got a hammer there, all right, which is a bullish pattern, candle. And then you got, this is not really a basing candle here, all right, but you do have it up and then you got a bottom one. So even if we were to draw a demand zone, I don't really like that basing candle, but we would take it from here to the bottom of the wick. All right, and again, this is the demand zone, so we'll make this blue. And look what you got. This huge candle here came back and wicked and then went all the way back up. You see that? So whenever you draw these, and again, I would like more for this basing candle to be a little bit bigger than that. But again, because of the candle pattern, it's a hammer, right? So we know that that's going to push the market up, right? So even if we go back, let me see. Don't really see, and if you don't see one on a daily chart, go down to the 4 hour.
I was gonna tell you, Kevin, on that big long candle
Uh-huh.
where it retested right back before that is showing the hammer.
Right here?
Yeah.
Yeah, but it's not, this was a gap though.
Okay. Okay.
Yeah, so yeah. So, and again, that gap document, this will be really good for you guys. Because technically this market ended up here. It started down here. So this was a gap right here.
Okay.
So this would have been perfect because it gapped down, came right into the demand zone and then shot up, right? So I wouldn't use that so much as a basing candle because you want the basing candle and the big candle to be right next to each other.
Okay, gotcha.
Yeah, yeah. Those are going to give you your strongest areas.
This is because I got a question.
Yeah.
I came a little late. I don't know if you explained it already, but what makes a basing candle a basing candle?
All right, good question. All right, I haven't explained that. So a basing candle is usually a candle. Let me go back to, let me find one on here first and I'll show you what I mean. All right, here's a good one. So a basing candle is typically a candle that's not, it's kind of a smaller candle than the one next to it. So anytime the market gives back or the candle goes more than what we call engulfing. So this one is way bigger than this one. So typically you want the basing candle to be right around a little under 50% of the other candle. That's what makes it a basing candle. And what this tells me is that the buyers were pushing this market way up with this candle here. Now here, the buyers tried to go down. The sellers tried to take it down. They couldn't take it down. The buyers tried to come up, but they couldn't really take it up, right? So now you got what we call agreement between buyers and sellers. Sellers couldn't push it down, buyers couldn't push it up. Then the very next candle, you get a huge shoot up. This creates a basing candle because the candle before, it was an agreement on price. Sellers couldn't push it lower, buyers couldn't push it higher. So that creates a basing candle. And it's typically, again, about a little less than 50% of a big candle. So again, once I find this area, if it's a demand zone, I take the top of the basing candle down to the wick. All right. And this gives me my zone. So all I do is I wait for price to get back to the zone. Okay. Now, this is also why, hold on one second. Hold on one second. Got somebody trying to get into the meeting and they said they can't get in. All right. So this is why we look at it. So now, based on this, okay, it came back to the zone. All right, but it actually continued to go down. All right, actually continued to go down. So now, when we look at this, based on this is another one here. So based on this move, number one, you got a gap down, you got a drop, base, drop, right? So this, and obviously with what's been going on, all right, in terms of a downtrending market, especially back in December, right? Right. So now this is why we got to make sure we test this demand zone, because we know this is at a time when the market was going down, right? So this drop, so now we could draw supply here, all right, this way. Because the market was technically moving down. So the market pushed down past, and now this demand turned into supply, and when it came up, came back down. All right. So now again, got a huge candle up. All right. Now the market, based on here, the market has been uptrending. So as it comes past this demand turn supply, notice that we have consolidation in this area. Then it actually breaks out. Then it gets to the supply zone, gets rejected. All right. Then it kind of, again, consolidates here a little bit before it actually continues to break out. So again, then it comes back in this zone, and now it's been consolidated. So this supply that turned demand, now it's been consolidation right here. Right. And every time it hit here, it went up, went up, went up, went up. All right. So again, when we do our supply and demand zones, just like support and resistance, it's not the end all be all, which means that it's always going to work 100%. There's different factors that go into it in terms of trend. If there's any catalyst news that moves the market, all of those things play a big part in determining whether a supply demand zone is strong, all right, or weak. Okay. Strong or weak. Now, let me do something here.
Quick
I'm
question.
gonna go. Yeah, go ahead.
What determines if the supplier demand zone is weak? And is that a place where we kind of know that we can really like take profit with it being weak or not?
Okay, I see what you're saying. Now, hold on one second. Let me go to something here. All right. All right. So now when you look at, hold on, you guys can you guys see my screen?
No, you see you.
Okay, hold on one second. What just happened? I don't even see the screen to share.
We see the trading view.
Okay, all right, there it is. All right. All right, so yeah, so what determines whether it's weak or strong is based on where it actually hits in a higher time frame. So on this one, the daily time frame, which I couldn't really find one on this daily time frame, that's why I had to go down to the 4 hour. That's going to kind of determine, again, this is not really a basing candle, but you do have a strong move up, but this is not really a basing candle. This will be a basing candle, but again, there's a gap here, right? There's a gap here. So I don't want to use that, but that's what kind of determines whether or not it's strong or weak, right? The higher time frame. Now, if you find one, let's just say we go down to the hour. If you find one on the hour based on the trend, that can also determine whether it's a weak or strong supply or demand zone. So if we look at this demand zone that we drew up from the I think this was the 4 hour. If we look at this, look out, this is a pretty strong demand zone based on the 4 hour, because when we come down to the hour, every time it hit here, boom, it broke out. And then when it came back, it hit here and then it broke all the way out. All right, so this lets me know how strong or weak it is. And what lets me know that, all right, what lets me know that is when I go to the daily chart, all right, how big the move is, right? How far does it move away? Let me go back to that. What was that other one? B. Let me go back to the other one because this isn't actually showing a good one. Yeah, so if I go back to this one, where did I draw that one at? All right, so where did I draw it? All right, so if I go back to this one, this determines, all right, how far the move up was based on where I drew the zone. So technically, this really didn't go too far, right? So I wouldn't trust this as a zone to where if it hits it like here, right? Gap down, it came through it. Because the market really went from 306 to kind of 312, which is not really that far when you're talking about a very strong support or resistance. Now, if I go to SPY, let me just go to SPY real quick, because we know this market was kind of uptrending here. All right, so if I take this area right here, this one here. So if I draw a demand zone based on this basing candle here, and then the wicks here, all right, this is going to be a very high area, because look how far this went before it actually ever came back to this zone. All right, so it started at 363, all right, went all the way up to 410 before it ever came back down. Still hasn't come back down to the zone yet, right? So this is going to be a very strong area, right? Because on a daily chart, right, this market went from 360 to 410 before it ever came back here, right? So the further away the market goes from that supply or demand zone determines how strong or how weak it is. Does that make sense?
Yes.
Okay. All right. Any questions that you guys have on supply and demand, support, resistance? All right. So I'm going to get into now indicators. Okay. These are indicators. All right. Now, these are, because if you guys have a free account, I think you can use up to 3, right? With the free account.
Yeah, that's correct.
All right, so I'm going to show you guys a couple of ones that I use and that you guys can use. Now, I mainly use the EMAs, okay? Those are the ones that I mainly use, are the EMAs or MAs, okay? And essentially, the EMA is exponential moving average, and then the MA is just a moving average, right? They're essentially the same thing. It's just that the EMA, all right, is more sensitive to price, right? Which means that when price reacts, the EMA reacts faster than the MA will. Okay, the moving average. So the exponential moving average, all right, basically reacts more quickly to price movement. So when price is moving, the EMAs will give you a better reaction on a trend before it actually starts. The moving average, right, just moves based on average number of candles. So it doesn't matter what the price is doing. It just takes the average of whatever the amount of candles that you set, right? That those candles are. It takes the moving average of the last 5 candles, the last 10 candles, however many candles you want to go back, right? So it doesn't move necessarily based on price. The EMA moves based on price, all right? So as the price moves, that's where it takes its average from, okay? Does that make sense? All right, so what I typically do is I'll take I like a EMA, the 3 and the 10 EMA. I'm sorry, the 9 and the 20 EMA. I'm looking at this 3 and this 10 here. But I like the 9 and the 20 EMA. All right. So if you go to indicators up here, you just select EMA, all right, and it'll you'll click it and it'll put it up here, right? So if you want the free account, you want to stay with the free account, the 3 most important ones that I would use are probably either the 9 and the 20 EMAs or the 5 and the 20 MA, right? And I'm going to show you the reason why, okay? Now, the 9, all right, and what you'll do is when you click this, all right, I just click moving average. So you just select moving average. I'll click one of these. I'll click it twice. All right, I know this is 4, but just if you only have 3, you either want to use 2 EMAs or 2 MAs, and I'm going to show you why. All right, so what you'll do is once you click it on your chart, on your indicator, you'll go to settings, all right, and again, you could change the color and then how big or small you want it in terms of the thickness, okay? So again, whatever your color combination, you could pick whatever you want, all right? In this case, this is what, blue? All right, so this is blue, and then the other one is yellow. So for my EMAs, all right, when I go to inputs, it'll let me know the length, okay? So, excuse me, I'll make one 9, all right? And I'll make the other EMA 20. All right, and let me hide these other 2 just for a second. All right, so now what the 9 and the 20 tells me is trend. Whenever the 9 crosses the 20, all right, so the 9 was the blue, right? Yeah, so the 9 EMA is going to be moves faster than the 20. The lower the number, the faster it moves and calculates, right? Because it's taking the last 9 candles and averaging them out based on price, okay? The 20 EMA is taking the last 20 candles, so it's going to move a little bit slower than the 9. So whenever you see the 9 crossing over the 20, it gives you direction of trend, okay? As we know, the market for SPY has been trending down. So now that you have the 9 and the 20, it trends down, okay? So these are good indications of trend, okay? Even when it came back down here, the 9 crossed below the 20, now you got a downtrend, but now you got consolidation. Whenever the 9 comes across the 20, the yellow one here, now you back into an uptrend. And the market has been moving up since then, right? So the 9 and the 20 EMA are ones that you want, okay? Now, the third option that I would use is the ORB. There's actually an indicator that I just found that is the ORB, what we always talk about the open range break. All right, there's an indicator. All right, if you just type in ORB, all right, open range breakout. Okay, and I'll add this one too. All right, so those are the 3 that I would use. I would use the 9 for the free account. Now, if you have more, if you pay for an account, or if you want to get a paid account, I'll send you a link, or just let me know and I can send you a link. And I think it's supposed to be cheaper than what the other one is. But if you're already paying, then don't worry about it. But if you want to not pay at all and you just want a free account, then either go with the 9 or the 20 EMA, or I'm gonna hide these 2, go with the 5, right? Or the 20 MA, all right? Because again, the MA just takes the last candle. So now, how many days are in a week? How many days we got in a week?
To trade?
5. You got 5 trading days.
5 trading days in a week, right? All right. So now I want to set my first MA to 5 days, right? Because the MA takes the average of whatever number of candles that you put. So I want the average of a week, and I want the average, and typically 20 days is the number of trading days per month. So I want a 5 MA, which lets me know the average of 5 days at a time. And then I want a 20 MA. All right. So again, I just select this as 5. And then the other one I want to make 20. All right. And again, if you go to style, you can change the color and all of that stuff. All right. But then you can change, should be able to change the thickness. Yeah, if you go to color, you'll be able to change the thickness there. All right. For the sake of being able to see this, I'm going to change it. So I'm just make one of them this color here. And again, you can make them whatever color you want. That doesn't really matter. And then I'm going to keep this one blue. All right. I like to make them real thick so I can actually see them. All right. So now, all right. So this actually, all right, comes in now again. So the blue one is the 5, right, which represents a week, right? And then this pink color, whatever color this is, represents the 20. So just like the 9 and the 20, when the 5 crosses the 20, again, you got a downtrend, right? So the EMAs, MAs, these let you know, right, the trend. So for me personally, I have the 5, the 20, the MAs. I have the 50 MA. I have the 920 EMA, and then the 200 EMA. Okay, so those are the ones that I use. Okay, all right. And for me, I'm looking for trends. Okay, the 9 and 20 EMA are going to show me the trend quicker than the 5 and the 20 MA. The 5 and the 20 MA is just going to give me confluence of what the 9 and the 20 are showing me. Okay. All right. So again, if you have a free account and you only want to use 3 indicators, use either the 9 or the 20 EMA or the 5 and the 20 MA. And then the third indicator you want is the ORB, right? The open range breakout. And when you do the ORB, you could change this to whatever colors you want and then whatever inputs you want. So like for me, right, I just have every 5 minutes, okay? And then I have the session from 9:30 to 9:45. All right, so whenever it gets to that 9:45 time, whatever the highest is and whatever the lowest, it's going to point it out for me. So if I go back to, and it only works on the 5-minute candle or lower. So the 5, the 3, or the 1 minute is the only, because when you get to the 15-minute, it doesn't show it to you. Okay. So if I go to the 5-minute, you see these dots here, this red dot and this blue dot. All right, that's the ORB. All right, so the high within the first 15 minutes, right, on what was this Friday, was here. The low was here. So what I typically do, so I can see it on other time frames, is I take the red line here and I put it there. I take the blue line and I put it here on the blue dots, right? And then now I have my, so if I go to the 15-minute, now I know that this was my open range break, my top, and this was my bottom. All right. So now, again, remember what we're looking for is for the market to break down or up below or above the ORB. Wait for it to come back and retest. All right. So again, if you have the EMAs or the MA, 5 and the 20 MA, or the 9 and the 20 EMA, it's going to let you know what the market is doing in terms of trending. So if it does break down below ORB, right, it's going to let me know that. That makes sense? So now if you want a paid account, if you don't already have one, I can send you a link, all right, to do that. But if you already have one, then you could put multiple on here. So for me, again, I have the 920, the 5 EMA, the 5 and the 20, the ORB, and I use a 200 EMA. All right, so those are the ones that I actually use. All right, so now, remember now, indicators don't tell you where the market is going, right? The market always tells the indicators what to do. right? Because the moving average, if I have a 5 moving average, right, what is that telling me? What did I say the moving average is telling me? If I got a 5 moving EMA, what is that telling me?
A weekly average.
Right, it's a weekly average of the last 5 candles, which means that the EMA can't make a line until the market tells it what to do. That makes sense? So I said that to say don't take trades based on indicators. You have trade indicators, right? And then you have trend indicators, right? A trade indicator would be a supply or demand zone, right? We want to take trades at supply or support or resistance, supply or demand. Those are trade indicators, right? The EMAs, ORB, those are trend indicators, right? So we don't want to take a trade based on a trend indicator. The trend indicator has to line up or be in confluence with a trade indicator. Does that make sense to everybody? All right, so once let's just say, all right, so let's say this 9 is 20. Again, somebody give me a stock.
Pepsi.
Pepsi. All right, let's go to Pepsi. And what's Pepsi stock? Let me see something. All right. Give me another one other than Pepsi. Because I don't know Pepsi's symbol.
Disney.
Walmart.
Walmart. Let's go there. Uh-oh. I need to learn how to spell. All right. All right. So now let's go Walmart. Now, watch this. Oh, perfect example. Okay. Perfect example. Now, my 9, this is the 9 and the 20 EMA. My 9 is the blue. So now I got a cross up here. So that lets me know that the market is what?
Trending up.
Trending up, right? So that lets me know it's trending up, okay? Now, watch this, all right? It's trending up. Now, it came back, pulled back, and hit this 20 EMA. So and it closed above the 9 EMA. So as long as the market, all right, continues to hold or support at this 20 EMA, the market is still up because the 9 is above the 20, right? So now watch this. Let's draw, look, watch this. Let's draw a supply zone, okay? All right, so look, so here, a basing candle. So we got a demand zone here. We got a basing candle, small red candle, and a huge blue candle. All right, so watch this. So if we do this, all right, boom. All right, so now, because we know the market is trending up, okay, all right, the market is going to pull back into the demand zone and at the 20 EMA, right? So that's a trade indicator lining up with a trend indicator, right? Lets me know that that's a safe place to take a call. Does that make sense?
Yeah.
Yes.
Yeah. All right. So this is what we look for. So every time, all right, sometimes you got to fake out. All right. Market was trying to come trend up here. All right. It was above the EMAs here. But again, what do I see? No breakout, right? There's no real breakout here, right? There's no real breakout. All right. And because there's no real breakout, the 9 never crosses the 20. Never crosses the 20. So again, technically still downtrending. That's why you have the huge gap down here. All right. And look at this. Most of the time when it's trending really good, right? Look at this. This is a nice trend here. All right. Nice downtrend here. All right. So when it's trending really good, you're going to get down, and you're going to get a pullback. Down, pullback. Down, right? That's letting us know that it's a downtrend. But notice, look here, let's see how many touches this has here. It touched the EMA here, bounced back down. Touched it here, bounced back down. Touched it here, bounced back down. All right. All right, now you got to break up, but guess what? It's still below the what? 20. So right now the market is still moving down. Now you got two big 15-minute candles, but the market is technically still pushing down. All right, it started this next candle kind of gapped up here, and then came right back down right below the EMAs. Because again, as long as the there you go. All right, as long as the 9 is below this 20, we are technically still in a downtrend. Right? We're technically still in this downtrend. And again, hit this line here, reject it. Okay, so now it's starting to come up. And see, when the 9 is close to the 20, right, you get consolidation. See that? Consolidation. So you don't want to take a trade. You don't want to take a trade there. All right. But this is basically what I look for and how I trade. I look for the ORB. Once the ORB is set, I get my supply demand zones, and I just wait for market to hit those areas. Right? That's all I do is I wait for the market to hit those areas. Okay. Now, any questions on supply, demand, support, resistance, EMAs or MAs or indicators?
I got a question. Kevin, can you show me how you pull up that EMA indicator?
Right. So if you go to indicators here and you just start typing in EMA, right, it should be the moving average exponential.
Okay. Okay.
Yeah, moving average exponential. And then if you just want the MA, just put MA, or you can start typing in moving. And like this one that says moving average.
Moving average. Okay.
Yeah.
Got it.
And if you ever look through these indicators, there's thousands of these indicators, right? Now, you could find 5 different indicators different than what I showed you that actually works for you, right? There's no, the thing about trading is there's no one right way to do it, okay? I've used several other indicators and been successful as well, right? But this is what works for me, right? This is why I'm showing it to you guys, all right? There's still obviously some other things that I look at as well, but for the most part, for the basics, this is what I do. I use supply and demand, and I just use these EMAs to determine trend, right? And then I look for certain areas. All right. So we good with that? Everybody
Kevin,
good so far?
hey, Kevin. The ORB, you said something about a 5-minute and a 20. I seen the 5, but explain back about why would you use the 20 on ORB?
There is no 20 on ORB. Yeah, the ORB is the 20 was when I was talking about MA or EMA.
Oh, okay. Okay.
Yeah, I didn't say anything about the 20 on the ORB. The ORB is just the first 15 minutes of the opening bell.
Okay.
So you got 5 candles from 9:30 to 9:35, 9:35 to 9:40, and then 9:40 to 9:45. And within those 3 candles, right, that's how you'll find the top and the bottom of what we call the open range.
Okay.
Yeah. Yep. So now, any other questions we got? All right. If not, I'm going to go into what I see for this week, all right, in terms of the weekly plan. All right. Well, number one, let me go to this right here. Hold on 1 second. Let me pull this up here. All right. Yeah, let me do this. All right. So the first thing is I want to show this. All right, this. Can you guys see this screen?
Yeah.
All right, so this is the first thing, okay? All right, the first thing I want is the earnings. All right, so earnings let us know if the market is going to, if that particular stock, right, met expectations as far as the earnings, or they didn't meet expectations, okay? In terms of the earnings this week, I don't really see Target here, okay? It opens before the market opens on Tuesday. So it says before open and after close. Target is obviously a big company that could move the market, okay? Best Buy, Costco. So you got Tuesday and Thursday you got ones that can really move the market, right? Most of these stocks, you can base them off of just the popularity, right? So Walmart, Target, stores that are all over the US that pretty much everybody go to, those are ones that will really move the market if they miss expectations based on earnings. All right, Walmart just missed. We saw the market tank when Target missed last year when they gave out their fourth quarter earnings report. All right, they missed. Okay. All right. So those are the big, popular companies. If they miss expectations on stocks, you can pretty much see the market move. Okay. All right, up or down based on it, which is why Nvidia, which is a big company, because a company dealing with a lot of AI and a lot of technology, right? That met expectations and exceeded in their earnings, which is why it gapped up from 208 to 230, right? So these earnings report really moves the market, the market and moves stocks. Okay, so the biggest one I see is Target, and this is going to open before Tuesday, so it'll let us know if they're going to meet expectations or if they're not. Right? If they don't meet expectations, okay, you're probably going to see a downtrending market that day. All right, so again, it does it. Their earnings report comes out before the market even opens. Okay, all right. So I can add these dates. Okay, okay, we'll do. Yeah, this is recorded, so I'll put this actually in the chat in the Discord, so everybody will have access to it.
All right. Quick question.
Go ahead.
All right. So if we know that their earnings report is coming out, could we place a bid on some contract like the day before and let it play out overnight? So like, how if today was the 17th, I could place a bid that I would put in a put that it would go down.
Well, the problem is you don't know. So say for instance, Target, right? Target comes out before the market opens on Tuesday. So that means you would have had to place your trade Monday before the market closed. So you basically don't, because you don't know yet whether they're going to meet earnings expectations or not. So it's going to be too hard to kind of jump in there before you know the information. Does that make sense?
Right.
Yeah.
Right.
So because you would have to basically take a trade for Target on Monday, but their earnings don't actually come out till Tuesday before the market opens.
I got it. That's what I was thinking. Like maybe I can make that prediction.
Well,
but then I'll be taking a chance.
You can, but you won't consistently win like that. Right.
I got it.
Right. So you can make that prediction. Right. Now, me personally, I give you what I think. Right. Everybody has missed earnings. Walmart, everybody. The only one that's really made their earnings plus the expectations was Nvidia. That's why the market has been currently downtrending for the past 3 weeks, right? Because everybody's missed their earnings. Because, and again, let me get into my weekly report. Let me go back to the charts. And this is based on why I'm saying what I'm saying, why I saw what I saw. And even when I said last week, right, I said I expect the market to trend down the entire week. Okay. You have three big time reports. You had the FOMC, you had the CPI, PPI, and then you have the PCE reports. Okay. All right. So now what you basically get on each one of these are called catalysts. Okay. These are called catalysts. Okay. Now, when you want the catalyst to move, when you want the market to make a huge move down or a huge move up, you need a catalyst to do that. Otherwise, it's going to go up whatever the average trading range is, right? And I think for SPY it's like 6, QQQ is I think 5. So typically on an average day, SPY is only going to move an average of 6 points a day. Now, when you get a catalyst like a FOMC meeting, all right, and let me put what these are. Federal Open Market Committee. All right. I probably should have put these on separate things. All right. All right. Consumer Price Index. All right. All right. You got the I think it's Producer Price Index. And then you have the PCE. All right. So, and this is just the personal consumption expenditures. All right. All right. So, all right, these are all catalysts. Put this down here. All right. There we go. That's better. All right. So now this is what moves the market. Okay. So you have and these pretty much happen every quarter. All right. So you pretty much have, and typically happens almost every month, to be honest, every other month. All right. So you have the Federal Open Market Committee. All right. Now, the last FOMC was, I think this candle here was, I think, January. I think it was this candle here. Yeah, I think it was that Friday the 20th. All right, when you had that huge movement. I want to say it's around this candle here. All right, but whatever it was, that's what got this market pushed all the way up, right? It was the last FOMC. So I think it was this candle here, if I can remember correctly. All right, now notice, what did you have before you got this shoot up? What do I see?
Hold on, I can see. Where you at?
Before we got this shoot up, what do we have?
Downtrend.
Before this shoot up,
Doji?
Is
it a doji? A doji?
No.
A hammer.
Where?
Right at the bottom of that. Where are you at the bottom of that blue one, right?
No, you guys see
ain't
this circle that I just drew?
Right, that's what I'm looking at.
So what happened for me to know that it was going to pretty much start to trend up? What do we have here?
Consolidation.
Before the market makes any move, whether up or down, you always have a consolidation, right? And that consolidation could be an accumulation zone or a distribution zone, right? So now you had the consolidation, because remember, we want a heavy downtrend since remember when we first started trading, the market was just on a heavy downtrend, right? And then it started to consolidate. And remember, it was like, dang, I don't know what this market trying to do, right? Because it kept consolidating right around the same area, right? Then you had the catalyst, the FOMC, right? And what was the main thing that Powell was saying? What's the main term that he was saying? Anybody remember?
I think he was saying that he's saying the market doing better, but it wasn't.
Right. Okay. Who said it? Somebody said it.
Inflation.
Disinflation. Remember, he was talking about disinflation, right? Because when the market happens, right, when you have high inflation, in order to control inflation, you got to raise rates, right? That's how you control inflation, right? So he kept using the term disinflation, right? At the CPI meeting, right? You didn't hear anything about disinflation. At the PPI, you didn't hear anything about disinflation. At the PCE last Friday, you didn't hear anything about disinflation, right? So what he tried to do is he didn't want to basically crash the market. Had he came out in January at the original FOMC, all right, and basically said, yeah, man, the market going to hell in a handbasket, right? Had he said that, right, the market would have just crashed. So what he tried to do is offer a soft landing, knowing that the economy was bad. Because remember, all through in December, what were the talks about what we were going to face in 2023? A recession, right? That's all they kept talking about. We're going to face a recession, right? So in order for the Open Market Committee, which deals with interest rates and all of those different things, in order to create a softer landing, they're saying, well, the market is doing pretty good. Because I will say, the job claims report that came out, right? There's less people unemployed and the job market is actually booming, which typically goes hand in hand with how the inflation is doing, typically. So inflation was high, all right? Markets, companies were obviously doing bad, didn't meet their earnings expectations, right? But the FOMC, Powell and the other Fed members were basically saying, oh, everything is great, right? And so now when they at the FOMC, when they kept talking about disinflation, right? Now, boom, you got an uptrend, right? So this market moved from 388 all the way up to 416 or 418. You see that? So in order to really make the market move, you need a catalyst, right? Otherwise, it's going to move on average every day, right? So the FOMC, which the next FOMC meeting is March 17th. Okay. So now the market is, guess what the market is doing? What did it do? Remember that 410 area? It kept it kept ranging between that 410 and 410, 413 area, right? It was ranging, right? Consolidation, distribution zone. Now, because the market is actually doing pretty horrible, all right, now we're starting to see the downtrend. All right. Now we're starting to see the downtrend. Okay. Now, March 17th, all right, this market is probably going to really tank. Now, if you want to swing trade, okay, this will be the time to do it. All right. But you want to set your expiration date if you can afford to do it, like March 18th, somewhere past the 17th. Because once March 17th hit, I think that'll be the catalyst to push the market down back to create lower lows. Okay. I think it's not going to actually push all the way down here until March 17th. All right. So again, you got the FOMC, the CPI, PPI, PCE. These are called catalysts. This is what moves the market. Okay. This is what moves the market. All right. So you got to be looking out for what those days are. So if you go to this forexfactor.com, this will give you a calendar of what's going on. So we actually got some Fed speakers this week as well. All right. But not any catalyst movements. Okay. All right. Let me see. I think it was, what was that? Wednesday. Right. Yeah. So you got a PMI meeting on Wednesday. Okay. All right. Wednesday, to see some news. And then you don't have anything really for the US. All right. All right. Friday. Yeah, we got another speaker here on the PMI. So these are Fed speakers. Okay. All right. It may move the market, but it's not as big a catalyst as these are. Okay. So the next FOMC is March 17th. All right. Then you got the CPI, PPI, and the PCE.
What's wrong?
Oh, no, to the bathroom. Oh, his mom.
Oh, okay. All right. So that's where we are. So now, based on that, okay, I'm looking for a downtrend. Now, what did I say earlier? In a downtrend, the market is still going to move where? If it's downtrending, it's still going to move where? All right, market's still going to move up, right? So we create a channel here, okay? Create a channel, all right? So basically, the market is going to move within this channel, all right? So you got a touch here. This is how I draw these channels. A touch here, touch here, touch here. All right, you got the touch here, touch here. So the market is always going to, this right now, it's a selling channel, right? So the market is going to move within this channel, right? So what I think is we're going to, at some point, get a pullback, all right? We're going to get a pullback, right? And the pullback is going to create a buying channel, right? What I call a controlled buying channel, right? And I think that buying channel is going to come back up to this 400 area, right? Oh, I'm pushing the wrong one.
I was with you.
up until saying that it's going to come back to the area. How did you indicate that? Is that through that the line or the day chart or the?
Well, it's going to come back to which area? Which area you talking about?
You say he's going to have a pullback, and
right.
then once it has a pullback, you have an area. Is that what a line is right there?
Right. So a pull. Right. So it's typically going to pull back to an area of strength, which remember it kept playing around that 400 area for a while. Right. So again, the pullback is typically going to be to another area of interest, whether it be a previous supply demand or support resistance. So remember this purple line that I have at 401.59, and I have a line at the 476. So I think this market is going to pull back to this area, probably closer to the March 17th. And then once that March 17th FOMC meeting hit, it's going to take out all of these previous supports, right? Because remember, you need a catalyst to really move the market a long way, right? So, and again, the market doesn't typically go straight down. So now that we've started the downtrend, right? If I look at my EMAs, all of them cross, okay? My 9 and my 20, my 9 has crossed my 20 EMA, and my 5 has crossed my 20 MA, right? So we know we're downtrending, but again, the market never moves straight down, right? So now we need to look for an area of support. So support areas are actually important in downtrends. Resistance areas are actually important in uptrends. And I'm going to tell you why. It's because we know the market can't just fall all the way down. So we need for it to get an area of support so we can mark the pullback, right? If we see a strong area of support, we know, okay, it's the pullback time. So because we day trade, okay, we can go down to a 15-minute chart and see, okay, we could take some calls because this is the pullback. You see what I mean? Even though it's a downtrending market, we could take a couple calls in a downtrending market because we know it has to pull back. All right. So if we go to these channels, I think it's going to pull back. Now, where is it going to pull back to? This 400 area, 399 to 400 area. And once it does that, go ahead.
So basically on the day trade, you're going to look for that. But on the swing trade, you know, it's a downtrending market. So you want to hold on a little further. Okay.
Right. See, because they have what they call macro structure and micro structure. The macro structure is the daily, the weekly time frame. The micro structure is when we day trade, right? So we want to learn what the overall pattern is so that we can trade throughout the day, right? So again, we know that we're starting to downtrend. Everything has told us that, all right? The trend, we had the consolidation or distribution zone at the top. We got the EMAs crossing, the MAs crossing. We got the catalyst news that came out. None of it, all of it missed its expectation, right? Everything is telling us that it's in a downtrend. Earnings are being missed by different companies, different stocks, all right? So all of that's telling us, all of that's confluence to tell us that we're in a downtrending market, okay? Now, watch this, until the market is actually broken this level of consolidation, we're technically still in a what? Uptrend, right? We're technically still in an uptrend because this could be a move back and a pullback to continue to go up, right? So you got to make sure that you understand, right, where you are in the market. So this could very well be a pullback from this uptrend, right? And it could very well hit an area of support and continue to go up and create a higher high. But again, for the market to continue to uptrend, it has to break this consolidation or this 418, 416 area until we can officially say it's uptrending, right? Until we can officially say it's downtrending from a macro perspective, it has to break this 380 something down here, I think, 379. Now, the market is going to pull back. The next week, I think we're going to get some bullish movement here to around this 399, 400 area. Might even consolidate a little bit in this area. Then the closer it gets to March 17th, I think we're gonna come all the way down. Then we're gonna come all the way down. All right. So that's where we are. So QQQ again, same thing. Okay, same thing for QQQ. All right. You got an area consolidation for the most part here. We had the uptrend, we had the consolidation here. We go in the uptrend. All right, got the consolidation. Now we're breaking down. All right, so again, I think you get the selling channel. I think this is going to pull back to right around that 296 area. All right around that 296 area, 296, 297. All right, and that's going to create. All right, and if you go back here, this is going to create a cup and handle. All right, so if this comes all the way down like this, and then comes up, right? That's the cup back to this 400 area. Then you're going to create a selling channel down. That's the handle. And then it's going to continue to come down this way. All right. That's what you have there. All right. QQQ, again, same thing. Looking for this market to pull back. All right. And then continue to come down. All right. Now, if it keeps going, one thing about trading is I always say the market is always right. If the market wants to uptrend, we don't care. We're going to take calls. If it wants to downtrend, we don't care either way, right? So I'm showing you, right, that it's probably going to start to flip to a downtrend. But if we see that it breaks these areas up here and it continues to uptrend, we ain't going to get mad. We just going to take the calls, right? The market is always right. We don't trade to be right. We trade to win. So whatever the market is doing, that's what we're going to do, okay? All right, but I just want to give you guys some at least some understanding of from a macro structure perspective and then from a micro. All right, so again, Apple, okay, same thing, consolidation here. All right, it went down and touched this gap on Monday of last week, or Tuesday, should I say. Monday we didn't trade, it was President's Day. But I said that Apple is going to come down and close the gap of 145, right? I said that at the beginning of the week. Because once I saw this consolidation, along with the other confluences that the market is getting ready to come down, I knew it was going to come back to this 145 area. And that's exactly what it did last week. Came back to 145 and closed this gap. Because remember, this gap up here. So all of this up here, right, is basically just consolidation when it gapped up. So Apple came back down, closed this gap. Now, again, I think this is going to pull back to right around that 149, all right, 149 area. It's going to pull back and then continue to come down. Now, again, if it pulls all the way back up above this 153, then we follow it back up. All right. But everything now is telling me that this is getting ready to come back down. Okay. Now, interesting thing here also is that the 9 has not crossed the 20 yet. So technically, this market is still what? Uptrending. Right? Even if you look at the MAs, all right? Now, the 5 has just crossed the 20, right? So this lets me know, again, that's an indication that the market is trending down, okay? All right, Amazon, okay? Amazon, same thing. All right, pull back to give us this, the lines that I drew, still expecting that head and shoulders pattern, which is the reversal pattern, all right, to a bearish reversal pattern. All right, so it pulled back here. All right, not quite. I thought it was going to pull back to this 98 area, right, to create this right shoulder, but which is the area where the left shoulder was at. But again, it doesn't have to be perfect, right? It went down and it's kind of curved this way. All right. So again, it came down, and I think it's probably going to try to pull back, all right, to right around this 95 area, 96 area, and continue to come down. All right. And so that's kind of what I see there. All right. The dollar has actually broken this 105 area. Now I think it's this candle here. It's 105.66. All right, because technically the dollar, all right, has formed a cup and handle, right? Basically formed a cup here, right? That's a bad drawing, but you get what I'm saying. All right. So this technically might come back down. All right. And if the DXY comes down, the stocks typically go up. So I think we're going to see a slight uptrend for the next week, all right, on all of these stocks, okay? All right, the ES here is coming down, all right? This 38 here, 39, all right, this is where this trend line is from a macro perspective, okay, on ES. All right, all of the stocks had that major downtrend that we were looking at, all right? And now it's gonna, if it breaks back down below, remember, as a matter of fact, this is also a good example. Remember before this market broke this area, remember I was talking about, let me go back to SPY. All right, remember before the market broke this area, I was talking about everybody thinks that this market is going to hit this trend line again and come back down. Remember what I said? What didn't it do to let me know that that market was going to break that trend line? You guys remember? What didn't it do?
It didn't create a lower low.
It didn't create the lower low, right? Every time you have a downtrend, you got a high, a higher, a high, a lower, a lower, a high, a lower low. Then you got a lower high, a lower low. All right. Well, this one, lower low, lower high, lower low, lower high, lower low, lower high. Uh-oh, here we go. We didn't get a lower low, right? So that lets me know that the market was going to break this trend. You see that? And remember, I called that out. Now you got a lot of people that were banking for this thing to hit this trend line, and they lost a lot of money because they're not reading the whole picture of the market. Right? I knew it was going to break because it didn't give us a lower low. So that means the downtrend has been broken. Right? Downtrend has been broken. All right. You see that on all of these stocks, okay? QQQ actually never quite got all the way up there to that trend line again. And I think each stock kind of had, a downtrending market here, even Apple. All right. Then you got Amazon, all right, downtrending. So if I was to draw a line here, pretty much hit this, all right? All right, boom. All right, it hit the trend line. Boom, one touch, three touch, third touch here, and boom. Now we need this to come down and create a lower low than 81.50, right? If it doesn't create a lower low, because I got a strong line at 87.87. If it doesn't create a lower low, we know this market is going to continue to go back up. All right. So that's kind of all I got. It's been an hour and a half. Okay, I want to make sure I'm preserving everybody's time, because time is money and time is important. So I don't want to keep anybody on any longer. But I went through every supply, demand, support, resistance, EMAs, MAs, different indicators. Also covered the weekly pre-market plan of what I think is going to happen. I'll still each day give a pre-market plan, all right, in the group. So you guys will see that. All right, but that's kind of it. That's kind of what I look at, guys. And really everything that I look at is based on exactly what I just explained. There's some other things that I look at, that's a little more complicated and advanced to really explain. But just know that when I call out these trades, all right, they're good calls to take. All right, that's why everybody's typically been winning. All right, so and again, there's no right or wrong way. Everybody has their own style, which gives them an edge. All right, based on my technical analysis of what I see. All right, then based with some fundamental analysis based on each different stock. All right, that's how I kind of know where the market is going to go before it gets there. And again, right, nothing is ever 100%, but for the most part, everything that I've been calling out was some bangers, was some hitters. So if you continue to stay, continue to understand what you're reading, what you're looking at, even when I make a call, you understand, okay, I see what Kevin is saying there, right? Because of your understanding, right? Then again, guys, the sky's the limit. Okay, the sky's the limit. And again, just don't focus on, breaking the bank every day. Just focus on winning consistently. If I win $10 every day, that's more in my account than what your checking account is going to give you at the end of the year. You see that? So just focus on consistent. Okay. Could you guys hear me? It says going in.
Yeah, I hear you. Okay.
We hear you.
Okay. All right. Yeah.
I hear you okay.
Okay, perfect. Yeah. So based on that, all right, that's the mindset that we have to have. Okay. All right. So, and again, whenever I say take profit, let me go over that real quick. All right. So whenever I call out these areas, okay, let me see something. Let me go to the Discord. February 23rd. Oh yeah, I didn't trade Friday. All right. So February 23rd, QQQ 296 put. Let me go to that real quick. February 23rd, QQQ put. Let me see something. February 23rd. That's right up in here. All right. All right. All right. So I called out here 296 put when it pulls back to 296.75. And I think this is the day. Okay, so 296 when it pulls back to 296.75. So I think this was it right here, right? So this was it. So when it pulled back, let me see what the ORB was. That was the 23rd. I think this was the day here. Yeah. All right. So basically, yeah, when it pulled back to ORB, all right, this is what I called out. So again, based on ORB, all right, based on this gap up, okay, all right, I knew it was going to come back down. We wanted to pull back. All right, we got in somewhere around here, and it came all the way down. Right now, I want to show because TP1 was 295.84. So 295.84, which is right about here. All right, and the reason I called this was because the previous ORB was kind of right here in this area. All right, now, if you got out there, especially if you got in up here, all right, you'd have made yourself some pretty good money. Now, TP2 was 295.48, right, which is this yellow line here, right? So now it still broke through that and kept going down. But again, if you got in here, even with one contract, that's at least $100 plus, all right? So again, if you get out, get in when you're supposed to get in and get out when you're supposed to get out, you can secure profits every day, right? That's the goal. And then if you do lose, because I don't win 100%. Sometimes I lose. Okay, that's just a part of it. But you want to lose less than what you gain. Okay, if I take 5 trades, and let's just say I got a good day on the first day, I made $100 the first day, right? Let's say the second day I took my second trade, I lost $20, right? No biggie, I'm still up 80. The third day, I lose another $20, right? Again, I'm still up 60. The third day, I lose another $20, okay? All right, still up 40, okay? And then the fifth day, I win $150, right? So again, I had 2 wins and 3 losses, but my wins were bigger than my losses, right? That's the key, right? And that comes by way of understanding when to enter the trade and when to exit, right? Certain days, like that Thursday, I think I made a lot, okay? Because again, you had a catalyst, right? You had the PPI that missed, and you had the PCE that was going to miss, right? So that's when we had that huge day in the market, right? I took a little bit more contracts that day because everything lined up to my analysis that the market was going to go down, right? So I made, I think, what I made, 6,000 or 7,000 that day. All right, so that's based on, again, understanding that that's a day I knew I could really take it and go down, right? Right. So now, how do you move your stop loss instead of just getting out of the trade if you only take one contract? Right. So whenever I tell you at take profit to trim, right? Let's say I got 4 contracts. At take profit 1, I might, trim, sell 2 contracts and stay in for 2. Then at the next take profit 2, I'll scale back, sell 1 contract, keep 1 runner. If I only have 1 contract, that means I need to get out of the trade based on my daily goal, right? If my daily goal, let's just say $50, and I reach $44 at take profit 1, guess what? I'm getting out, right? I'm just closing out. I take my $44. I'm 6 points off my goal, because what typically happens, because remember, the market never goes straight down. It always pulls back. It never goes straight up. It always pulls back. So at some point, you're going to get caught in a pullback. But if you got a good entry, it really doesn't matter. Let's say we got in this trade up here, right? All right, it came all the way down and then it started to pull back right here, right? But I'm still protected because if I got in up here, right, this pullback doesn't scare me, right? And then it continues to come down. Now, some people wait and wait and wait, and then the market ends up coming all the way back, and now you don't have nothing. When you just could have took the $44, even though it wasn't your goal of 50, it's still profit and close enough, right? So if you have one contract, most of the time, I would say get out when you've met your goal, or at least gotten close to it. But every take profit, because I typically take 4 contracts, right? Again, if I, once that day came where I knew it was going to pretty much go down because the earnings was missed, everything was going down, everything I think I took 6 contracts, right? So, but for the most part, I typically only take 5 contracts, anywhere between 3 to 5 contracts, most of the time 4, because at TP1, I always cut 2 and then keep 2 in. Because if you take 4 contracts, if the market moves the way I want it to move, I get a quick $200 right off the bat, right? And my goal is $250 to $500 a day, right? And now most days you guys see I post, I'm 1,500 one day, 1,800, 1,000. So, but my goal is 250 to 500. So I typically meet my goal when I put the 4 contracts at take profit 1, and then I just leave runners. The runners is what gets me the extra, right? But I typically always at my goal, I get out, I trim my contracts. Because if I stay in for 4 contracts, obviously I can make more money faster. But that I trade based on discipline, right? So at those 2, at my take profit 1, I'm going from 4 contracts to 2. If it gets to TP2, I'm going from 2 contracts to 1. Right? I'm able to be successful every day based on that. So whatever your goal is, don't look at the market based on movement, right? Because trust me, every day you're gonna say, man, dang, boy, if I had stayed and I could have made this. You can say that every single day. Even if I make $1,000 and my goal is $100, you still gonna have a chance to say, man, I should have stayed in there, right? This is where discipline comes in. Because one day you're gonna stay in there and you're gonna lose a whole lot of money. Right?
Hey, Kevin.
Uh-huh.
Got a question. So I know you said when it's at the top and it come down, you said something about you can at least get $100. Is that only the in the money contracts that will make you get that $100? And the more you
No. I typically I don't ever take contracts in the money. Right? I typically always take them one out of the money. With the exception of, again, that day, right, where I made that $7,000, I took one in the money then because, again, I was very sure of what the market was going to do. But I typically, with one contract, right, with one contract, I'm so proud. Thanks, Sophia. Yeah, my discipline has gotten way better. Some of these people have been with me when I've been trading since about 2-3 years ago. And yeah, I wasn't as disciplined. I used to win a lot, but I used to lose big too. But yeah. So typically with one contract, if it makes a 2-point move, right, depending on the area you got in, if you're one out of the money, that'll get you anywhere from $75 to $100 just with one contract.
Okay, what am I doing wrong? Because I do out of the money, and I'm not.
Are you just one out of the money?
Yeah, sometimes it's 1 out of the money, sometimes it's 2 out of the money.
Right. So the further you get out of the money, right? Because again, let me go over that real quick. What do I need? Oh, where's my Thinkorswim? Let me log into this real quick. Let me go over that real quick. All right, let me go over this real quick. Let's see. All right. So real quick, okay. Now, all right. This is in the money. All right. The gray shaded areas are in the money. So this is the strike price. To the right of the strike price, you got puts. To the left of the strike price, you got calls. We take calls when we expect the market or the stock to push up. We take puts when we expect the stock to go down. On the put side, the gray shaded areas, all right, are what we call in the money. Okay. On the call side, the gray shaded areas, which is at the top, but what we call in the money. Right now, what I typically call out, just say the strike price right now is at 396.27. Right. When I call these out, when I call them out in the stock options chat in the Discord, I take the one out of the money, I put 396 put, and then I'll give you the range. And I'm typically going to take this one out of the money. Right. The further you get away from out of the money, right, it don't really start to move until you get in the money. Right. So just take, for instance, I take a put at 396. Right. Now, if the market goes from basically 396.27 to 394, right, that's a 2-point move, which means that I'm in the money from when it hits 396, 395, 394. Right? So that means my price, all right, and this also is what moves it. So if I buy a contract, right, at $1.62, which is the equivalent of $162, right, because each contract is 100 shares, right? So basically, I'm paying $162. If this gets in the money to 394, the 396 strike price is now going to be 2 in the money. Right? So look at 2 in the money here. So let's go from 398. So this contract is $269. So that means that a 2-point move, this contract that was 162, right? If the price gets to 394, will typically be right around 269, between 357 and 269. So when you sell it, you're selling it for the difference of whatever the in the money price is than when you actually bought it. Right? So with one contract, a 2-point move should get you anywhere from $60 to $100.
Okay, so now I understand it. Okay,
Yep.
thanks.
Yep, no problem. Same thing with a call, right? Now, me personally, and I have the capital and the account size to do it, but I typically never get it because I don't need to make $1 million in one day, right? All I need to make is the equivalent. All I need to make is the equivalent to what I would make on a normal 9 to 5. Right? That's all I need to make, right? Because most people pay their bills based on their 9 to 5. So let's just say I make, again, $30 an hour, which most people don't make. Let's just say I make $30 an hour, right? All I need to make is $240 a day, right? Because $30 an hour times 8-hour workday, that's $240. So I don't need to make $2,000 every day. All I need to make is $240. Right? So whatever your job is, or whatever, even if you don't have a job, whatever your job was, just multiply that. So if my job, I make, for the average person, most people make anywhere from $15 to $25 an hour. Right? So you take $22 an hour times 8, that's $176. Okay. So all you need to make is $176. You don't need to make $1,000 every day trading. All you need to make is enough to pay your bills. If you make 176, if you make 176 times, let's just say 20 trading days, that's 3,520. Right? That's $3,500. The average person's bills are nowhere near $3,500, depending on if you're living between your means. Okay. All right. So that's how you do trading. Okay. So again, if my bills are, just take whatever your monthly bills are. My monthly bills are $3,000. Just divide that by 20, right? That means I need to make $150 a day trading. Some days you'll make more than $150, because again, my goal is $250 to $500 a day, right? Because typically, when I was doing accounting, for the most part, I made about $40 an hour. So $250 to $500 a day, right? that's right around the same amount. And I can do that, right? Instead of working an 8-hour day and working all this overtime, working 24 hours a day during tax season, right? I can make that within an hour of my day. All right. So that's kind of how you want to treat this. All right. So again, it's not about making a bunch of money at one time. Because trust me, you're going to miss some trades, right? But there's other days to trade, right? You always hear me say, don't chase it. Don't chase the market, right? There's going to be other trade setups. We miss one. Okay, we'll catch the next one, right? And so I typically always take one in the money because if it goes my way, all I really need is a 2-point move. Like for me, I have 4 contracts, right? That's what I typically trade with. So all I really need is a 2-point move. I don't need it to drop 80 points. I just need a 2-point move. And so when I analyze that take profit 1, take profit 2 is right around my 2-point move. Right. And once I get that, I trim so I keep secure my profit, and boom, I'm able to make $1,000 a day easily. Now, the more capital you have, the more contracts you can take. But if you take one contract, matter of fact, this is what I'm going to do. I'm going to take one contract this week. I'm going to just document it. Okay. So you can see, all right, just based on, because again, if you take one contract for a SPY and I call out a QQQ or Apple, and you take one contract in each of those stocks, right? Just say you make $50 on one, $50 on the other one. That's $100 with just one contract. And you've only had to leverage maybe $200. All right, so that's typically how you do that. But one out of the money, because again, the further you get, that's why I always say, make sure the delta is a 0.30 or higher. And that's typically 1 or 2 out of the money. Because again, if I take this trade, although it has a 0.30 delta or higher, it's only $90, right? But for me to really make money with one contract, I need this market to go from 396 to 392, which, right? Obviously, the average trading range is 6 points for SPY. So for it to move from 396 to 392, right, it's really not that difficult for the market to do, right? So understand that further I take it out of the money, the further in the money I needed to go past my strike price for me to really start making the money move faster. All right. So even with one contract, it'll take me a little minute to get in the money. All right. But as it goes, because the reason why, and I'll end this here, the reason why we want to take a contract closest to in the money as possible is because we want to secure profit before we're actually in the money. And when you take one out of the money, as long as it goes in your direction, you're gaining money. And then when you get in the money, now it's going to move faster. So by the time you get in the money, when you take 1 to 2 out of the money, you should have gained a little bit of profit by that time. And now when it's in the money, boom, now the profit, now it's going to move a little faster. And now you can go ahead and get on out of the trade. But 1 to 2 contracts, because again, most of the times we catch these contracts at about 1.10 or 1.05. So if you take 2 contracts, all you need is leverage of $200. And 2 contracts will get you, especially once it goes in the money, that'll get you to $100 quick. That'll get you to $100 quick. Because if you see 1, 2, 3, 4 in the money, is that contract is $433. So if you have 2 contracts at 396 and it goes down to 392, that puts you 4 in the money. That means each of those contracts, if you bought them for $90, are now going to be worth $400. You see that? That's how it works in terms of how much you make. All right. Any questions there? Any questions there?
No, thank you.
Oh, no problem. No problem. All right. And so again, I'll post this let me see, where am I going to put this at in the Discord? Video recaps, useful tools. Yeah, the other trainings I got are in useful tools. So that's what it'll be in the Discord under useful tools. And I'll put it there. All right. You guys got any other questions for me?
I appreciate it, Kevin.
No problem, no problem. Again, I'll put this in there so you guys can come back and look at it. All right, based on anything that you guys see. And again, oh, thank you. Yeah. So guys, the goal is financial literacy, generational wealth. All right. Again, if you guys know anybody that's going to benefit, all right, hey, invite them to the group. All right, because my thing is I want to teach people how to free up their time and still make the money, so that they can do the things that they actually want to do. All right, so again, let everybody know, because I'm trying to get this out for free. I had some people supposed to join, didn't even join. Just the Zoom, just this training call, right? But you know, some people are just too busy. All right, some people are too busy. Either way, we're gonna continue to move forward. All right, we're gonna get to this bag, and we're gonna continue to buy our time back. All right, so again, appreciate y'all. Y'all have a good evening.
Thanks, everybody. Have a good evening.
Okay, we'll do. And you guys can always send them to bytvnow.com. That's the website, and they can go there. But I'll send you a little flyer or something that we can do to promote it. All right.